is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love has no obligations or expectations. When you love, whatever you do is because you want to do it. It becomes a pleasure. It is like a game, and you have fun with it. When you love, you don't expect something to happen. Whatever happens is okay, and hardly anything disappoints you. Market-wise, let's take a look at it. We have the Dow Industrials up 210, NASDAQ up 80, S&P's up 30, gold contract down $6.80, trading at $1,319 an ounce. Silver up 3 cents at $19.10 an ounce. Platinum down $2 at $1,034 an ounce. Copper flat at $2.16 a pound. Light sweet crude up 24 cents, $44.39 a barrel. Bonds, 10-year note flat at 130.14, 30 a bond down 20 ticks, 165.07. King dollar down 47 ticks, trading at 95.27. The yen is at $100.12, and the euro is at $1.12, and the yen is at $1.02. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You get the SPY up $2.41. You're at 102 million shares. You're going into 168 million shares. Bottom line, we'll see whether this holds the 215.14 coming into the close, because if we do hold the 215.14, yeah, I can make it to the top of the trading range on Monday, which would be 216.81. Option expiration tomorrow, folks. You can expect this volatility to continue. The NDX 100, the Qs are going for the highs. Okay, so the Qs are up $1.88. You've done 28 million shares, and you're really right at the high. The high in the Qs are $118.12. Right now, you're $117.81. So that says the Qs are going for the high. Gold contract. What do we have with gold? Gold out here today, we had a price spread, folks, from 13.32 to 13.12. You're at 13.18 right now. Bottom line, gold looks like it's building cause to get into this lowest swing point. Now, the lowest swing point is 13.05 right now. We've done 194,000 contracts, which was going into 234,000 as well as the 180. And it was a sideways move. You know, we're down 750, but realistically, that's a sideways move. It is pushing lower, though, intraday with volume expanding. And that's telling me that gold actually wants to get down into this 1259 area. Notes. We go take a look at the 10-year notes. What do we have with the notes? Notes out here are trading at 130.13. You've done 130,000 contracts. That is setting up a test of the 129.26 of 2 days ago, and it very well could be an ABC structure on the way down. We got all the way up to 130.27 in the notes today. Couldn't handle higher price. Sold off those levels. We go over to the 30-year bond. 30-year bond, sideways move out here. USC. 30-year bond, sideways move out here. 286,000 contracts. Intraday, we got down to a price point of 164.17, and you get volume in the bond market also. Bonds and notes still want lower price. King dollar. What do we have a king dollar? King dollar had a high out here today. King dollar had a high out here today of 95.48. Right now, you're at 95.22. You get a sideways move. We've done 19,000 contracts. King dollar is building cause to get up into this 96.21 area. I suspect we'll see whether it can get up and above that. It looks to me like we're going after this 97.61 area. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, when we look at the world of the S&Ps, this is going to be, well, actually, I want to go to the world of the NDX 100. This is why. So, NDX 100 is the strongest index out here. You're up $180.84. You're at $117.69. Now, that's on the daily. If you put this on the weekly, what you're going to see is this. I expect you're going to see this go after the high again tomorrow, which is $118. And what that will set up, now this is where it's going to get really deviant, that actually sets up a last engulfing. And this is what a last engulfing is, folks. A last engulfing is that you've been in a big uptrend, you're at the highs, market goes south. This is on a weekly basis, too. Market goes south, goes downtown. Rejects that downtown price, then, in this case, finishes at the week and the at the highs, and that in council charting, candlestick charting is the last engulfing. It takes it'll be the following week for a confirmation on that. What that would be is that, number one, first you'd get up to the 117.97, which are right next to it. We hit 117.81. Then you close the following week lower. So it's going to be wild watching this whole thing shake out. We go over to the SPY. SPY doesn't have half the juice as the NDX 100. SPY right now is at 215.43, and bottom line, the SPY hasn't reached its gap down yet. The gap down would be 217.03. Dow Industrial, same type of setup in the Dow. Dow Industrials are, we're up into $195, but we're off the highs pretty good. 18,660 is the high, so you're still 430 points off of that high, and it's going to take quite a bit for the Dow Industrials to get through the 18,400. Small caps, Russell 2000. We take a look at the Russell 2000. What do you have with the Russell 2000? Russell 2000 right now is up $14, and yeah, that'll take quite a bit to get through the 1235 also. There was a question in the den. What is the difference between a last engulfing and a regular engulfing? Well, you have a bullish engulfing and a bearish engulfing. A bullish engulfing would be positive. That's when you go to a lower low after a downtrend. You finish up for the week. Bearish engulfing is that you opened at a high, you closed at a low. That's a bearish engulfing. The last engulfing is tricky. There's no two ways about it. It's tricky in the aspect that it is a bearish signal, yet it looks like you're at highs. Well, no, you are at highs. No, it doesn't look like you're at highs. You are at highs. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 198. Nasdaq's up 76. S&Ps are up 28. Gold's down 760. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 184. You get the Nasdaq up 72. S&P's up 26. As we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy's got an outstanding show, 5 to 6 Eastern Standard Time. Now, no matter where you are in the United States right now, if you happen to be listening in your car radio, remember that you can get them right on your cell phone. TFNN.com. You hit Tiger TV. You're going to get some great HD quality video as well as audio. And, of course, don't forget, every Monday, Wednesday, Friday, we do live content from 8 o'clock in the morning to 5 in the afternoon, Tuesday, Thursday, from 7 o'clock in the morning to 6 in the afternoon. As you come over to our website at TFNN, Andy's got a great newsletter, the Technomento Commodity Report. Now, you can test drive this 30 days absolutely free. Go to newsletters. Go to trading newsletters. You see the Technomento Commodity Report right there. Andy Heck, what's going on?
Hey, Tom. How are you?
Doing
Welcome
great.
back.
It's great to be back.
I know. I'm sure it is. How was your trip?
It was good.
Good.
It was good.
Okay, that's good. All right, so let's start it off with what we were talking about last Thursday, which was copper.
Copper. Dr. Copper.
And it was around 208. And I kind of thought it was really setting up for a nice little move, and we are up at 216.35 now.
It's a beautiful thing.
And looks like 220 to 230. That's my profit zone.
Okay.
On the copper here.
Yep.
Copper, this is a purely technical move, in my opinion. It's playing a little bit of catch-up with some of the other base metals. I wouldn't get too excited about it. I mean, it really has to get above 233 to look really interesting here. I'm not sure, given the inventories, given the fact that there's so much output, that it's got it in it. But certainly looks good. Certainly looks good here for another couple of pennies. That's for sure.
They had a big move yesterday, man. That was no doubt. That it had the
Big
price
move,
spread,
yeah.
it had the volume, it had everything.
Exactly. So 225, midpoint. That's kind of what I'm looking for. The interesting thing is we might get some fireworks next week, because if we close above 210.90 tomorrow, which looks like a pretty good odds.
Yeah.
We'll get a key reversal trading pattern on the weekly chart, so we could get some follow-through buying from that.
Yes.
And we had a key reversal back on the 12th, and it did follow through. So we'll see what happens there. So that takes care of copper. Oil's had an up and kind of a rocky week here. The EIA and the API stats came out. They were better than the market expected. But the EIA has a new methodology of looking at inventories, and that caused the price to come down afterwards. Also, word out of Libya and Nigeria that they're going to step up production hasn't helped the price at all. And here we are below $44 a barrel.
So what is the EIA doing differently, Andy?
They've changed the methodology to make it more real time.
Okay.
In terms of their reporting of oil inventories, but they're crossing during the changeover period, as I understand it, they're using two different methodologies, putting it together. So the numbers aren't as good as they have been in the past. But one thing is for sure, we had, regardless of some minor changes, the API, we were expecting a build of 4 million barrels. The number came in at like 1.6 million, so way below expectations. And the EIA came in at a 600,000 barrel draw, and the market was expecting like a 3.6 million barrel increase in inventory. So whatever the differences in the methodology, this was not a bearish set of numbers, and the market went down over $1. So I think the market's more focused on huge production coming out of potential production coming out of Libya, coming out of Nigeria, and this Algerian meeting that's coming up between OPEC and the Russians, which is, like everything else, I don't have too many hopes for any agreement on anything other than them shaking hands and going off into the sunset. Now, what is bullish for crude oil here is this chart I have up right here, and that is the gasoline crack spread, which has moved from under $10 to its current price of almost $16 in the last couple of sessions. And if you look at the heating oil crack spread, that has also rallied sharply today. And, as I always say, there's a lot of pieces to this crude oil puzzle. Yes. And processing spreads or refining spreads, one of those pieces. And when you're seeing strength in these processing spreads, that tends to lead to some strength in the underlying crude. So I think we're kind of close to the bottom end of the range here. And, the range is 40 to 50. We're below 44, so, we're honing in on it. So that's kind of interesting here. I think crude oil has a chance to rebound, probably to 45 in the middle of the range. Natural gas, you had inventory numbers come out today. They were exactly spot on as expected at 62 BCF into inventories. But last year, the number was 74 BCF, and we are still 45% below in terms of the growth rate. Both the one-year average and the five-year average are now below 10% above, previous periods. So, natural gas is trickling in, and the price is starting to pick up a little bit. I think we're going to have an attack on this 302.20, these recent highs and this key resistance over there, but we'll have to wait and see.
So, we're between the heating oil and the gas, right? I mean, before we know it, I know you're in hot weather, I'm in hot weather, but before we know it, 60 days from now, the Northeast and Midwest is probably going to get cold, right?
Right. It's that season, but the markets are prepared for that. They know that.
Okay.
Let's natural gas went down below $2 last winter.
Yeah.
Heating oil traded 26.05 in the middle of February.
Yeah.
The height of demand season. So, it has a lot to do with supplies, but, producers are just not making a lot of money in gas here. I think probably a good trade here. I kind of like gas. I think it's headed to $3.25 to $3.50, maybe to $4 during the winter. It's just uneconomic here. Crude oil, on the other hand, if you look at all the producers in the world, it's pretty economic, even at $40. And, the upside there is, it can't seem to get above $50. It needs a shocker out of OPEC, I think, to do that.
Yeah. And, it seems these days, OPEC in general, and I guess the thing with Russia, they need some bread and they need it quick. Not that
they need bread, so they keep selling.
Right. No,
The next Wednesday is the Fed meeting, right?
Yes.
So I'm calling it's kicking off what we're going to call silly season.
Yeah.
Next Wednesday. So
Okay.
we kick off the Fed. That's we get the Fed numbers. We're going to get lots of volatility. And then everyone's going to open their eyes and realize that we are in the heart of silly season as the home stretch to the election is on and the debates are on the next Monday. And we're going to get lots of volatility. We've been seeing it in stocks 4 out of the last 5 sessions. We've had a triple-digit move in the Dow. The bonds are heading south in a big way. The dollar, I have a chart up here of the dollar. The dollar's flatlining. It's trading at exactly the midpoint, like 95 and a quarter of the range between 97 and 92. Not a lot going on, but next Wednesday could be a big day for the dollar.
Yeah. Oh, listen, there's no doubt. You stay right there, okay? We're coming right back. This is Andy Heck, Tom O'Brien. Folks, we want to hear from you. Our phone number is 877-927-6648. We have the Dow Industrials up 180, Nasdaq's up 71, S&Ps are up 26, gold's down 870. We're going to right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 183. We get the Nasdaq up 73. S&Ps are up 27. We're talking with our man, Mr. Andy Heck. We are talking commodities, and of course, don't forget, folks, every Tuesday, Thursday, Andy's got a great show right here, 5 to 6 Eastern Standard Time. As soon as I get off, you jump right on, get on that cell phone, TFNN.com, hit Tiger TV. Okay, so we are at what chart am I looking at now? Let's see.
I'm just looking at the dollar, and
cool.
Right,
Okay.
so the dollar's flatlining here.
Yes.
Exactly in the midpoint, of the trading range since, I don't know, March or so. And Wednesday, like I said, it kicks off silly season. We're going to see a lot of volatility. The dollar will also be volatile. Gold and silver and oil, everything. I think everything gets really volatile. The risk for markets here is a big risk-off event going into the election. The Fed is backed into a political corner here. They're kind of damned if they do, damned if they don't. One side of the political aisle is going to point the finger at them if they don't raise rates. Trump is going to say that they're goosing the stock market up for the election. If they do raise rates, Clinton will say, that they're acting, improperly going into the election. They can't win, and it's their own fault because you know what? They've had 8 months to do something where they could have taken this period and done nothing. But now they're in a situation where the U.S. economy is growing at a moderate pace. You're growing at around 2%. A 25 to 50 basis point Fed funds rate is really inappropriate in this economic environment. And their backs are against the wall. And chances are they will do nothing, and they'll come out and they'll speak hawkishly. The Fed and OPEC are like two peas in a pod.
They've turned into twins, there's no doubt.
They are. They talk, but they do nothing.
Right. So the statement, folks, will come out on September 21st at 2 o'clock. That's the bottom line. So, right. And then, the probability right now that the Fed fund futures rate is saying for
below 20%.
Yeah, it's 18%.
Yeah.
And what has happened here today also, so check this out. So the Fed fund future rate for September 21st is 18%. For November 2nd, which would be the next meeting, is 26%. And now for December 14th, it just went back under 50%. It's 49.7% today.
Right.
So it's going to be interesting watching this whole thing shake out.
Yeah, it's amazing. And lately, Trump has been taking swipes at the Fed saying that, hey, the stock market is artificially high. Based on what they've been doing. So, he's gaining some traction. Those polls are closing. It's going to be interesting, man. It's going to be crazy.
It is. Hey, let's take a call.
Sure.
We'll get Scott from Fort Collins. Hey, Scott, what's going on?
Not much. How are you guys?
I'm doing great, man. Thanks
Good.
for calling.
How are you,
Thanks
Scott?
for holding.
I appreciate having both of you because I can tell you I have an interest in wheat because I see it's at decade low. And then the second question was the original call was for dry bulk. I see the rates going up, so I was wondering about a shipper to follow.
Okay.
All right. So let's start with wheat. Wheat is at decade lows. The WASDE came out. The World Agricultural Supply and Demand Estimates report came out, and there is lots of wheat around, and the price is $4 a bushel. You're right. It's traded down to decade lows. But the interesting thing about wheat is that demand continues to rise for wheat. And the other interesting thing is that the Kansas City wheat has gone back to a significant premium to the Chicago wheat, which I view as positive. Now, I don't think this thing's running away on the upside, but I also don't think it's got too much more downside in it. And we might have to wait a while because the harvest season is coming to an end. But I do like wheat as well, Scott. I think it's a good play here.
Now, Andy, what is the difference between the Kansas City wheat and the Chicago wheat? What is it? Is it different use?
The Kansas City wheat is hard red winter wheat,
okay,
and the Chicago wheat is soft red winter wheat. And most of the bread manufacturers in the United States price their requirements off the Kansas City wheat. But it's a less liquid contract. So it tells us a lot about what consumers are doing. And when the premium starts going higher, which it has been, it means that, hey, maybe the consumers are locking in some prices. And it's always good to follow industry.
Oh, pretty cool.
Right.
And
so that's certainly an interesting one here in wheat. I mean, the way to play wheat, one of the only ETF really in the wheat market, which is a combination of the three wheats: the Minneapolis wheat, which is the spring wheat, the Chicago wheat, and the Kansas City wheat, is the WEAT, which is the ETF product from Teucrium.
Yeah, let's take a look at that. So.
It's probably about 7.25 or so, 7.20.
Yeah, 7.18. Okay.
Yeah, right around there.
Would you put a stop on that if you bought it here?
I'll tell you, with wheat at decade lows, I wouldn't. I really, at this point, I think it's a long-term thing. And I don't think, I think I'd very ginger. I wouldn't buy your full volume here. I'd be a scaled-down buyer here on any weakness. I'd buy a little here, keep a small call, long position, and stay with it. The beautiful thing about the Teucrium is they've really done a good job in terms of negating a lot of the roll risks that a lot of the other ETF products have. So I'm pretty comfortable with that. I'm sitting long at myself.
Okay. And lastly, on wheat, I thought I read that the United States has become they are a huge global producer, but I thought I read that it's less so from, say, 40 years ago. So is that going to affect where wheat prices go on, say, the WEAT?
That's true. Look, wheat is a ubiquitous commodity. It's the staple ingredient for bread, and it's grown all over the world. Whereas the U.S. is the largest producer and exporter in the world of corn and soybeans, when it comes to wheat, we're one of many large producers. We are a significant exporter, but it goes up and down each year, our stature in the world in terms of our crop. Right now, we're a significant producer because we had a big agricultural crop across the board this year. But the important thing to remember is that the total use, while we have record crops, we also have record demand. And that's important to remember there. So that it's really a function of weather each year, Scott. Moves around. I think your second question was on the dry bulk shipping index.
Yeah, no. Well, he wanted to actually look at NM, which is let's see, so trading storage, this international bulk carrier, so I guess this goes right into it. From high to low, I mean, all these equities have got absolutely smoked. I mean,
Yeah, they've gotten smoked. I mean, interesting thing that's gone on, though, in the last couple of weeks is that the Baltic Dry Index has risen to 804 this week. I think it's at 756, but it went to the highs of 2016. We have to remember, this Baltic Dry Index was trading at 290 on February 11th. So it's telling us that China is back in the game and they're buying dry bulk commodities here. Some of the data out of China this week was good. Industrial production, unlike in the U.S., was good in China. Retail sales, unlike in the U.S., was up in China. And I think fixed asset investments grew by 8.1%. So we are seeing some infrastructure buying in China, and that has caused the shipping index to go up. That should be good for some of the major shippers, but the minor shippers still have issues.
That shipper in your mind for dry bulk?
Oh boy, that is such a depressed segment. I have to take a look.
I can tell you, they let's see, relative strength wise, it would be. This is interesting. And would you just call? Yeah, just stay right there. I believe it's going to be probably something you never heard of. There's only one that's up 13.5% for the year. Stay right there. We'll come right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We got our man, Mr. Andy Heck, who's going to be coming right up at 5 to 6 tonight. We're talking with Scott from Fort Collins. We were talking about the shippers. So, Scott, there's nothing here that you can actually trade in the U.S. that's the strongest. The strongest shipper out there, relative strength-wise, is a shipper in Japan. If you happen to be watching Tiger TV right now, you're going to see that's up 13% for the year. But every other shipper is down and down big, man. I still wouldn't touch that area just right now.
Shipping's tough. Shipping is tough.
Yeah.
Okay. Well, I appreciate you addressing it.
Okay, man. Have a great one. Have a safe one. And you know what's interesting, Andy, is that I've been looking at them too. It's like, okay, man.
I do too. And you know, dry ships, TK, all these. Oh, they're so ugly.
They're still a mess. Exactly.
Yeah, they are so ugly.
Let's go to Tom in Plymouth, Mass. Hey, Tom, what's going on, brother?
Hey, Tom, Andy, how are you?
Hey,
doing
how
great,
are you?
man. Yourself?
Pretty darn good.
Good.
Got a couple of questions on this JDST. I mean, I've been buying it between, 22, 23, selling it almost every day, 24, 25.
Let's take a look at it. So JDST, folks, is the direction 3 times junior gold miners index. Okay, bottom line is that this is a daily investment vehicle. It trades at 300%, the inverse correlation of the GDXJ. So we're at a really wild place right now, folks, inside GDXJ, inside the gold and silvers right now. And what it is this. You know, my take is that tomorrow is going to be, tell us quite a bit. And what it is this. If we just look at the GDX, here, I'll put the GDXJ up. And that's what's... So Tom has the inverse of this correlation. And, you know, what we had is that, okay, you know, you have that swing point at the 1st of September. That low is laying out there, 41.11. You have the big high volume down for 2 days, which was on Friday and Monday, and now we went sideways. My take on this, Tom, is that we do have an ABC down. That's what it looks like it's going to do. Today's a tough one, though, man. It's a close call, but I like the idea of how the actual gold and silver equities traded today, meaning that they went sideways, they were deviant, like, okay, they want to go higher, and the gold contract was down. Because realistically, folks, when Tommy and I were doing the program this morning, Andy, right, I said, you know, man, this thing wants to bounce. And it was down, you know, GDX was down about 30, 35 cents, and it's up now. But it's almost one of those that the equities led the contract down. What it looks to me like, now this gets really wild, folks, is it looks to me like even intraday today is that actually the gold contract looks to me and the equities are leading everything down. Because when they get blown apart, right, the S&P is down and the NASDAQ is down. It's like, oh, my God, this is what's going on here. So
Yeah. I have an interesting take on this. Two things. First, I'm very glad to hear that you're trading it and closing it out every day, because I hate to hold these kinds of instruments overnight. I think it's always a mistake. So, congratulations on that. You're definitely using the instrument the right way. I can see a case where they sell gold and silver down sharply tomorrow. I can make an argument to make room for a rally next week when the Fed does nothing. So, I'd be careful about that. If you do, don't get overly bearish tomorrow if you see gold down $20 or silver down 50 cents or something like that, going into next week, because these markets might just be making room for a rally after Janet Yellen tells us that rates aren't going anywhere.
That's a great point, especially on a Friday. Gold like to do that little dip there.
We know
make room.
Yeah, Fridays are a trip. There's no two ways about it, man.
Yeah, but right now, all these markets, they're in wait-and-see mode. And as I said when I came on at the beginning, I think Wednesday starts silly season, and there's going to be a lot of trading opportunities. But don't get married to any positions out there. It's going to be wild.
Cooking, brother.
Great advice, gentlemen. I'll talk to you soon. See you guys.
You talk to us tomorrow morning, Tom.
Yes.
This is good, Andy. We get another call, and this is going to be about potash. Let's go to Bruce in Harrisburg, Pennsylvania. Hey, Bruce, what's going on?
Hey, I'm doing well. I just want to get the technomental thoughts from you guys on this stock.
On potash. Well, look, we went up on the rumors of the merger with Agrium. The merger is now official, so the stock is coming off a little bit. I like this whole space. This stock is cheap. And I'm talking now from a long-term perspective. You got a PE ratio under 20 when the rest of the market is trading at 26. I like agriculture. I think there's going to be a tremendous amount of M&A activity. We saw Monsanto get bought by Bayer this week, or at least, that they're going to go through the motions. That's not the last one. I think, John Deere is in play. I think Mosaic's in play. I think all of these agricultural commodities are going to create economies of scale because their customer base is suffering under the weight of low grain prices. So what you're going to do is you're going to have much stronger companies coming out in the long run. Tom, what's your take?
Well, my understanding is Agrium's taking them over, right?
Well, no, potash is actually potash has the upper hand in this thing. From what I can see, first of all, they're moving their corporate headquarters up to Canada. I don't know if that's for tax purposes or whatever, but potash has a tremendous amount of reserves. Both of the CEOs are going to remain with the new company.
Okay.
But in terms of kind of valuations, I think potash is a stronger, higher market cap.
So, Bruce, do you own this? You're looking to buy it? What are we doing?
Yeah, I'm looking to get into it. Or if I should get into it, I guess also the question.
Yeah. I'd wait to see how this bottom lays out. The $15.95, 96 cents, that's where it broke topside from. And, pulled all the way back into that area once again. And it's like, okay, man, you're going to try to get into this 15.21 again? It's real possible.
Yeah, it was like a buy the rumor, sell the news kind of thing. It rallied hard on the rumors of the merger. Now it's done. It's come off. I think that whole space has come off. But you have to also remember that grain prices have come off hard in the last couple of sessions. So these fertilizer stocks do track the grains. As a long-term play, the world is going to need more fertilizers, and Potash Agrium, this joint company, is going to be a dominant supplier. So they're going to build market share and they're going to lower costs. So that isn't a bad thing.
There you go, Bruce.
All right, thank you, guys.
Okay, man. Have a great one. Have a safe one. These farmers have got hammered, haven't they? Pretty amazing.
It's a tough one for them, and the thing is, it's good for the fertilizer companies because they're like the OPEC members. They got to plant more and get bigger yields in order to make revenue.
But they need money.
They need more fertilizer.
But they need money to do that too, right?
They need money to pay for the fertilizer.
They need money to do that.
Absolutely, no question about it. No question about it. But hey, mouths to feed in the world, that goes up every day. And, in the long term, we're going to, also, there's kind of a misconception about fertilizer companies. Let's say in 2012, when grain prices were booming.
Yes.
They were booming because farmers couldn't produce.
Right.
So, we need kind of a happy medium of a little bit lower yields and higher prices. And that kind of stability is what those fertilizer companies will thrive in.
It's a beautiful thing. Listen, Andy, thank you so much. We look forward to hearing you at 5 o'clock.
Thanks a lot, Tom.
Stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 173. You get the Nasdaq up 74. S&Ps are up 26. So we go over to Wells Fargo, folks. We take a look at Wells Fargo. So Wells Fargo, 5 days has gone from a price point of, $49.86 to $45.19. If you want to see how equities go after high volume swing lows, well, you have it in Wells Fargo. Now, what you have is this. So Wells Fargo, June 27th. High volume swing low, $44.50. It has a counter trend bounce all the way up to 51, right back down here again. Now, what you have also is this. That's on the daily. When you put this on the weekly, what you're going to see, what we have now is that you are hammering the bottom of this consolidation that we've been in. This has been in consolidation since February of this year, the beginning of February. That consolidation, particularly how we came down, well, each and every time. The first time we came down off a high of $56. You got the lows going at 44. You had 142 million. You bounce higher. We bounce up to 51 with 73 million. You come back down, you get the lows in at 125 million. You get highs in at 100 million, and guess what? We're already at 194 million. So your lows laying out go like this. This week, on a weekly basis, we're going to still add in tomorrow. We're going to probably do about 240 million. That's going into 125 million as well as 142. That is building cause, folks, to break down. And let's see where it is. Oh, this is going to be interesting. So if we put this on a 5-year, it's pretty intense, actually. Yeah, this is, okay, so you're off the highs of 58. You've been consolidating since February. You know, bottom line is that this thing is, we'll see how many more months it's going to take to break down. But this wants to break downtown, and more than likely you get a 58. You get a 14.8 to B on a longer-term basis, which would get you into $39. That's how this thing is set up. And, of course, what is wild about that is that with Wells Fargo's case, it's like, how do you have a high-volume low with, well, there's many stocks in the marketplace that have that. My point would be that someone always knows something. That investigation has been going on for quite a while, and larger institutions more than likely were selling that equity. In fact, we can go see that right now. We'll look at the last filing. So the last filing, let's just see who was smart. So in the last filing was June 30th. Oh, look at that. Lansdowne Partners. This is intense. Lansdowne Partners had sold 19 million shares. They only had 762,000 left. Boston Partners, oh yeah, they knew what was going on. They sold 18 million shares. They only had 3.8 million left. State Street, now you can't count them. That's just the ETF structure. Here's a big one. Montague and Cardwell, they sold 3.1 million shares. They only had 61,000 left. Lord Abbott sold 2.6 million. They had 227,000 left. Now, the ones that they had left, when I'm saying that, folks, that was as of June 30th. And what we do know is that there was a lot of sellers. Wow, man, there's a lot of sellers. Let me see who got sucked in. So the buyers, 630. Paranis Investment Group, they got taken to the cleaners. They bought 10.9 million shares. Big numbers. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up 180. NASDAQ is up 75. S&Ps are up 27. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of the relationship. It's not up to you to control the other half. Respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We had the Dow Industrials up 177, NASDAQ up 75, S&P's up 26, gold contract down $9.30, traded at $1,316 an ounce. Silver off 11 cents at $19.05 an ounce. Platinum down $4.64 at $1,032 an ounce. Copper flat at $2.16 a pound. Light sweet crude up 32 cents, $44.47 a barrel. Bonds, the 10-year note up one tick, 130.15. 30-year bond down 17 ticks, 165.11. King dollar down 37 ticks, 95.28. The euro is trading at $1.12, and the yen is trading at 102. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We have the SPY that's up $2.12. You've done 130 million shares. We're coming into option expiration tomorrow. Volatility we have, and I suspect, going to continue to have. Okay, so we take a look at this baby. The SPY is trading at 215.27. On the open, can it hit 216.81? Yeah, I suspect it can. We'll find out if it can get up into that area. NDX 100. So the SPY still is bearish, folks, okay? NDX 100, different animal here. NDX 100, the 3 Qs, went up $1.80. You're at $117.64. Now, this is going to, you're right at the highs. The high in the NDX 100 are the 3 Qs is $118.12. The low of that high is $117.47. So you can see we're already into that. That's going to go after that tomorrow morning. Now, that's the bullish case. The bearish case in this is that when you look at this on a weekly basis, what you've set up is a last engulfing. And what a last engulfing, folks, is this. After a nice in the big of the uptrend, by the way, and on the weekly, this is a very large last engulfing. What a last engulfing is this, is that you've been trending up for quite some time. You end up opening down, closing up for the week. You could have daily, weeklies, monthlies. But when you have a weekly, it's quite a thing. It's a hard feat to do, number one. So bottom line, that's what it looks like we're going to have. A last engulfing also, you need 2 weeks in order to see whether you can have confirmation. Because what happens is this. It's a clean last engulfing that's setting up right now. So we'll see how this baby shakes out. Meaning, I expect you're going to hit this high out here tomorrow. We'll see whether it holds. If it holds, then we'll see the following week. What does happen with the last engulfing, you just have to trade back underneath it, and then you got a big failure on your hands. NDX 100. No, let's do the small caps. We just did the NDX. So the IWM. IWM today was up $1.44. You're at $122.04, and this just doesn't have enough juice. This can be still an ABC structure on the way down, as well as, let me see. So the SPY, the IWM still an ABC down, SPY still an ABC down, Diamonds, Dow Industrial still an ABC down because we came down with volume. You're going up with light volume. The Dow Industrials right now is trading at 18,212, and you get your high out there, 18,668. We'll see whether the Dow can even make it up to the 262 level, which is only 60 points above where we are right now. Gold contracts, we're coming into a Friday. It's always very dangerous coming into a Friday when you've been in a downtrend in the gold market. Gold is held, the metal is held really well. It's still at 13.16. We did 199,000 contracts today. That is saying to me that it is, number one, going to go after the swing low, which we're right beside it. We went to $1,312. $1,305 is the swing low. You break that, which I suspect we're going to, and then we're going to go back to the June 24th low where we broke out from. That is what we go over to the bonds. I'll show you inside the bond market. The bond market has already done it. The bond market, the 10 years at 130.16. That also set up a potential B to C of an ABC structure on the way down today. We got to a price point of 130.27, rejected higher price, had lighter volume. That setup looks like it wants to get into $129. The 30-year, what we have with the 30-year, same type of setup in the 30-year. 30-year got to a price point today of 166.02. You're at 165.11. The 30-year is almost just about no man's land. The 30-year looks to me like it wants to run down somewhere into this 161 area. If we go over to the TLT, if you want to look at the 20-year ETF bond fund plus, what you're going to see out here is that it couldn't move today. You're down 58 cents. We put this on a weekly, and what you're going to see is that we haven't, let's see, so we're at 133.67. Yeah, 132 is game. And because you're already inside 135, I can actually make a case that 129.68 is game. We had some really good volume in February as it went topside, but we've already pierced that by 2 points. You start piercing something by a couple points and you get a 5-point bar, you can go right down to the bottom. King Dollar. What do we have with King Dollar? King Dollar out here, folks, had a sideways move out here today. Now, King Dollar really hasn't moved around much. What King Dollar has done, however, is this. Each and every time it tries to get to lower price, they sell it off, it rejects lower price. We've had the last sign of strength that we had in King Dollar was actually yesterday. And what it was is this. You had big volume. We had 21,000 contracts. You're pushing into the higher swing. King Dollar on June 26th is when it broke its downtrend. That's when we went from 94 to 95.53, and that's telling me that we want to get up to the 97.61. You get the Fed meeting next week, and the way it looks to me, folks, is that I don't see rates going up September on November. I see it going up in December. But I think what the market's going to realize from the statement in September that, hey, we're going up a quarter point, period. That's in 90 days is what? At 90 days is nothing. You stay right there, folks. We'll come right back. Dow Industrials finished up 177, NASDAQ up 75, S&P's up 24. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take a look at the indices and see what the strength versus the weakness was inside the Dow Industrials. Now, Apple, we were down yesterday, but Apple saved the market yesterday. Apple put a lot of juice in the market once again today. And the Dow Industrials, Apple was up 3.4%, or 380. Intel was up 2.6%, or 94 cents. Merck was up 1.68%. Every Dow stock was green, folks. The laggard was Boeing. Boeing was up 0.08%, but every Dow stock was green. We take a look at the NDX 100. Inside the NDX 100, Skyworks was up 6.3%. Now, Skyworks, folks, is an Apple supplier. Was up $4.62. NVIDIA was up 3.9%. You had Dish Networks up 3.5%, and then Apple was up 3.4%. Taken away from it, you had Ulta Salon, that was down 1.8%. Discovery Communications was down 1.3%. Let's get a Paul in San Jose, California. Hey, Paul, what's going on?
What's happening, Tom? How you doing, buddy?
I'm doing great, man. Yourself?
Hey, I'm doing awesome, man. Thanks for asking. Thanks for taking my call. I really appreciate it.
Absolutely, man.
Hey, I have a question about EXEL and the biotechs in general.
Okay, go ahead.
Yeah, I'm taking a look at EXEL on a weekly.
Yes.
And I just want to see if I have this right, or maybe you could walk me through this. To me, it looks like an ABC up with a pretty large, the 1618 extension on top of it.
Okay, so we got EXEL, folks. This is a biotech company. They develop small molecule therapeutics for the treatment of cancer and other serious diseases. The low for the year is $3.55. The high is $13.49. Okay, so now I'm going to put this on a weekly. Okay, so you're saying that when we took out the B point, well, probably where, like in June or something, right, on a weekly? Is that what you're looking at?
Yes.
Okay.
Let me see there.
Yeah, it's right in here somewhere. But the volume was so large on the 24th. Normally when I do an ABC structure, no, all the time, actually. So you see how the volume on the July 24th of 2015, on the weekly, the volume was a monster. It would almost be hard to take that out on volume. So, you got the extension. There's no doubt about that. What are you thinking of doing here?
I'm thinking about shorting it, but I was wondering if you could walk me through, because I'm trying to learn how to short a little bit better. I was trying to get your thought process on when you look at an equity that you want to short. I know that last time I called you, I asked about REN, and you said the short interest of the float was a little high. This one is 14%. What are kind of your parameters when you're looking at a stock to short it?
I wouldn't do anything over 7 to 8%, first off.
Okay.
Yeah. And the reason for that, folks, is this, is that let's say if you do 10%, that 10%, what that means is that 1 out of every 10 stocks have to get bought back, period. If you want to see something that's really bizarre, we go over to Herbalife. Herbalife is 39.5% short position right now. So that means every 4 out of 10 shares have to get bought back just to make a profit. Because you got to remember something. When you go short an equity, you sell it, but you have to buy it back unless they go bankrupt in order to, make money. So what happens there is that the buying itself can get the equity higher. What also happens is this, is that, and you've been doing this long enough now, when you have traders across the world, many traders can just concentrate on equities that have large short positions. And most of the time, Paul, they wouldn't be like 10%. They'd be going after something that's 20, 22%, okay? And then you get a good trading day, and you'll pile on. In the piling on, it doesn't take much because other trading shops will see people piling on because they'll pop up. We all have not the same type of software, folks, but what ends up happening is that when volume comes in equities, all of a sudden it's moving. Say, oh, look at this guy. Okay, they're running the stock, so everyone just runs the stock. That
is that the good old short squeeze?
That would be a short squeeze on a daily basis. What happens, a real short squeeze, my definition of it would be that the person or the operator actually knows that the company has turned around and now they're really coming in. They're coming in for weeks. What does happen on a daily basis, though, that happens quite a bit on a daily basis. And then the stock will just fall apart, and a lot of times it just fall apart at the end of the day, but you get those spikes going higher. For a short position, the way that, here, I'll show you something. So, now I'm short this stock right now, but I just want to show you why, okay? So, UPS, right? Mm-hmm. What you have with UPS is this, okay? If I bring this, it's trading $107.08 right now. So, you get a little consolidation that's happening. Let me bring this back a little bit more. So when you take a look at this, what you're going to see, I went short up here at about 110, right? Now, the reason that I did that, first off, when I first look at this, it's like, okay, right off the bat, we had a downdraft. You're going to see the downdraft sticks out like a sore thumb, and that downdraft was on the 29th of July. Monster volume. What it did, folks, is this. It came down with monster volume, and then when I say monster volume, it was 3.9 million, and then it goes all the way back topside, goes 2.7 million, then tries to test that with 1.6. Okay? So what we got is this. First, it's come down to where it should come down, right? Which is the high volume swing low. Now, you see when it's coming down how, well, here, first I got to show you why we bought it. So I'm going to go from there to a weekly. When you go to a weekly, what you're going to see is that you're coming into, and so what you can do with these, Paul, is this. I go into a 6-month first, right? So you can get a kind of a clean deal about where is it right now. Then I go into about a 2-year weekly and then a 5-year monthly, okay? So I just went into a 2-year weekly, and look what it was running into. Okay, on the first week of January, this equity came from $114 to $102, and it did it with 28 million shares traded, right? Mm-hmm. We come back topside, and we come back with 15 million shares, and then we do 11 million. Now, that isn't enough to go short. So watch this. This is the kicker. This is the actual confirmation that you want to do it. And this is how the art of time of the trade works, folks. It will confirm both sides. So we're up with 11 million. We know we're looking into how it goes into a 28. And then 2 weeks later, you go down with 15 million. And guess what? Then we come back up again with 9.8 million. That's what we got it right there.
Okay.
So you're going into a high volume downtrend. It failed. I didn't do it then. I waited for another downtrend with volume to confirm that, okay, you get a seller. Then it bounced again. And, this week, it looks like, you're going to have 9.8 million versus 15. we'll see whether the price can stay down there. Now, what I'm going after here, watch this. I'm going to put this on a larger basis now. What I'm going after is that I'm just going after the high of that low, which is $96.10. And where that's coming from on a monthly, you're going to be able to see when you come over there off the high. You see that's $98.24. That's a high volume low also.
Okay, I see what you're saying.
And then see on the monthlies how, monthly tested with 48 million versus 92, then tested the next month with 46 million. That's what you're looking for, man. Cooking, brother.
Right on. Hey, thank you so much, Tom. I really appreciate it.
Have a great one, man. Have a safe one. Stay right there, folks. We'll come right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, and one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We look at some of the high-volume stocks in this market, and we have a low-volume market, by the way. Apple was the biggest one out there, up $3.80. You had Sprint Corporation up 28 cents. We had Micron Tech up 52 cents. Oracle was up 61. Oh, look at this, baby. That's a big number. So Area Pharmaceutical was up 30%, $9.48. What the heck is this? So these biotechs, look at this. Okay, so is this a takeover? Let's see. Second phase. Ariel announces public offering of common stock. Oh, this is wild. So check this out. Oh, this is going to be wild. Let me see what this is trading at right now. So this is up $9.48 at 30.61. Still trading 30.61, but it looks like they're going to do a. This come out after the. Yeah, this come after the close. Let me see what it says here. AERI, clinical stage pharmaceutical company focused on discovery, development, and commercialization of first-in-class therapies for the treatment of glaucoma and other diseases, announced that it's commenced the registration underwriting of 50 million shares of its common stock. Shelf registration statement released. So this is what you're going to have in this, folks. This is pretty wild. This equity goes topside today really well. Not sure why. But right away they're doing an underwriting. So it depends on what that underwriting comes out at as to where the stock will go. But what I expect you're going to probably see out here is that it's going to be down tomorrow. So don't bite on this baby right now. This is pretty intense. This is really intense, actually. If you pull this back, you talk about volatility inside biotech. So April of this year, the stock's at $35. May 1st, it's at $8. September 18th, it goes to 30 again. March 26th, it's at 11. Pretty intense, no doubt. Some of the Dow stocks out here. Let's take a look at some of the Dow stocks. We had Big Blue was up $1.61. We had Coca-Cola up by 25. All the Dow stocks were in the green out here today. Walmart was up 88. United Technologies was up $1. Let's go over and take a look at ExxonMobil because the XLE bottom line looks to me like it still wants lower price. So ExxonMobil was up 48 cents, trading $85. This is down from 95. And this doesn't have any juice. Let's take a look at this. And what you're going to be able to do is put most of these on weeklies now. And, you know, Exxon closes below $86.11 tomorrow. That bottom line, that'll be on the way down into the $79 area. We take a look at Chevron, CVX. What we have with CVX, that was up $1.08 today. We're at $99.50. That little baby, more than likely, let's take a look. On a weekly, whoops. Okay, so, oh, this is pretty cool. So, yeah, this one's lower price. On a weekly, it already is pushing into that low with volume. We've already done, no, it's going to be, no, 30, we're going to do more. We've already done 32.3 million, and you're going into 40. So that looks like it wants to run down to $96. Let's get a Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
Doing very well, thank you.
Cool, man. So, the GLD, what are we doing?
You know, you talked about gold a little bit. I am short with October 128 puts on the GLD, but I wanted you to take a look at the daily.
Yep.
It looked like we were kind of heading into that swing point, and we had a little uptick in volume today. I just want to get your thoughts.
Yeah, this is, you know, there's certain days, folks, that are just really so cool, especially when you're bisecting and dissecting, you know, equities that you're always following, and this happens to be one of them. So it looks to me that this thing wants to go not only lower, but lower pretty quickly. And the reason I'm saying that it sounds so diabolical, folks, is that if this was 20 years ago when I was looking at the GDX, it'd be like, oh, no, that's going to hit that's at a bottom today. And what it is, it has to do with how it's hitting it, and each and every time that it tries to get away from it, there's still a seller in it. There's still a seller in it. There's still a seller in it. And it's not violent, you know. And what I've seen inside the gold market in general, when it gets like this, your probability is that it's going to get very violent very quickly, you know. And we'll find out. You know, this morning, let me tell you, when I was doing the show this morning, you might have heard it, I was so close to, you know, getting in these equities again, you know, because it's like, okay, man, are you hitting the bottom, you know, because it kept hitting it, and it wasn't hitting it with volume. By the end of the day, however, guess what? The GDX had volume in it. The GLD, you can see the GLD, even though it didn't hit the swing point, we did 12.8 million. That swing point only has 12.8 million. It's like you don't want to hit swing lows with the same amount of volume, especially coming into a Friday. So, and
we'll see. Fridays are always interesting, and it seems like when it is leaning that direction, that we'll find out. We'll know.
No, but you're right. When it's leaning that direction, the probability seems to be higher. Factually, I don't know what those exact numbers are, folks. But what does happen is that when it's leaning that direction, you can get some very bad downdrafts. Versus, if it's leaning the up direction, it doesn't mean it's going to go up on a Friday. It just happens, doesn't it? Doesn't it seem like it's always the down deal on the metals on a Friday? So it's like.
Oh, and like you say, too, it's always a little dangerous when you're sitting right above a swing point. Now, it has all night to rest.
Yep.
And we'll see what happens tomorrow. But, yeah, it seems like it's...
And the bigger picture, this is what I like about that trade right now. My take, folks, is that these gold equities and silver equities want to do a 50% retracement of the whole move, which would be a normal retracement. It would get everyone really bearish on them, the whole ball of wax, okay? So that's my bigger take. And my bigger take on the aspect of the rate hike is that we're going to get it. So the market recognizes it some days, other days they don't. I don't see us going by December without a 25 basis point rate hike, which is nothing, by the way. So it's like, people are saying different things why markets go up and down. I think the larger issue is that 25, 50 basis points, what the market doesn't know yet is that will they go up again, very quickly. This is the first time, just so you can understand this, folks, that when rates, we went up in December, it was one and done. Prior to that, the last, let's say, 25 years, each and every time that the Fed had gone up, they went up one after the other after the other. And I don't see that, but guess what? We'll find out. With the Bank of England not going up today, folks, so the Bank of England, Carney came out this morning, and he said that he thought things were cool. And that's a big heads up, man, because if things are cool in Europe and they're not going to go down anymore on rates, guess what? We can go up faster than the market thinks at this particular point. Cooking, brother.
All right, thank you, Tom. Take care. Huh?
Talk to you in the morning. Have a great one, man. Have a safe one.
Okay.
You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to Oracle. Oracle just came out with numbers. So the estimate on Oracle was 58 cents. They made 55, which is really unusual for Oracle. Margins, though, huge margins, 39% margin they work with. The total revenue, the estimate was $8.7 billion. They came in with $8.6 billion. Oracle closed at a price point of $40.86. It's trading at $40.30, which is not a big deal for that type of miss, by the way. Let's go take a look at Oracle and put this up in a weekly. Okay, so Oracle hit its high of $46 in December of 2014. Yeah, it's going to try to go after a slightly lower price. Nothing heavy, though. You know, it's intriguing. They're not taking Oracle apart for that type of miss, though. And 50 cents, big deal. It came up 60 cents today. So the low of, go after the swing low. That's about how that's laying out at this particular point. Let's go take a look at good old Walmart. So Walmart out here, folks, is trading at $72.40. This has been having a tough time holding any type of price at all. So we're down from the $92 level. You're $90.97. You're right into ICE. And ICE is laying out here at $72.23. It's going to need a lot more volume to get up and over that level. And if it actually does get inside of $70.14, that would be saying that your probability goes a lot higher that you will get down into $67. We have a high volume swing low at 57, but 67 would be the first place to see whether it could take that out. Okay, so let's go over to the silver market, because what we are going to have happen here is this. So picture. The dollar today went sideways. You know, gold was down slightly, silver was down slightly. They were really sideways moves, and they have been for the past 4 days. Silver's trading at $19.03. That context there, it also looks like silver's going to try to make a run for this 1876, and we'll see whether it goes after the lower swing low of 1840. If we go to the SLV, so with Brent from Martinez, California, we had been looking at the GLD, and the GLD is the the GLD is the ETF for gold. The SLV is the ETF for silver. So we also had an expansion of volume inside the SLV as it's going after this $17.84. We hit $17.87 today. We did that with 8.1 million versus 8.8. So it's almost the same statistic, man. It's pretty amazing. You know, we'll see if in fact it's going to shake out and get down into those lower levels. What I do expect you're going to have, if that's what we have, is that you're going to have to see the dollar move topside. If we go over to the yen, we take a look at the yen. The correlation inside the yen versus the metals is pretty direct. And what it is this. The yen has had a sideways move the last 5 days. When the yen goes higher in price, that means that it gets weaker. gold goes south, goes down very quickly. And it looks to me that the yen on the 26th of August broke its downtrend. In the last 6 months, let me see if it's actually a year. Yeah, it's been quite a while. It's been since, December of this year. You see, that's what the run is in gold. December of this year, the yen was at 123. Runs all the way down to 100. Now, it certainly didn't break the whole downtrend when it went topside on the 26th of August. What it did do, however, is that, let's see, I'll put this on a weekly. See how this shakes out. So on a weekly, on a weekly, all it did is break the, close that one. All it did is break the downtrend that had started out at 107. So right now you're 102. But that, if in fact we get to that 107, what you will see then is that's going to get intriguing then, because the channel line is set up right now at 103.90. You're not that far away from it. I thought the Carney today in the UK, folks, to me that was a big heads up. And it is not the markets were not looking for the British, the United Kingdom Central Bank. They were not looking for that to reduce rates. I don't think what they were looking for, though, which they got, was that the Fed Governor Carney was talking about that he thought things were going good. And, when I look at the aspect of the UK getting out of the European Union, it's probably the smartest thing they've done in a long time. Because the bottom line is that London is London. It's always going to be London. The money's going to be in London, all of the above. I remember years ago, I heard this so many times about Hong Kong. Hong Kong, years ago, folks, when it was going back to China, it was supposed to be down the tubes. Really? Down the tubes? That Hong Kong just turned into a bigger and bigger and bigger money center, bigger and bigger real estate center, bigger and bigger everything. And, if you're into Fibonacci at all, that's kind of how life goes. Life is expansion and contraction, but guess what? It's actually, if you believe in the Fibonacci theory, it's always expansion. You have contractions in between it, but everything grows. Everything. Universe, markets, people, you name it, it grows. Plants, all of the above. Let's go and we take a look at the euro right now. So if we take a look at the euro right now has been trading sideways. That's at $1.12. And, if the dollar's going higher, that's been trying to get into Brexit day. Brexit, that's when we went from $1.14 to $1.09. Right now, this still looks like it wants to get down into the lowest swing point, which is $1.11. Nothing heavy. I mean, this doesn't look heavy at all, meaning that it's going to get destroyed, because it already has got destroyed. It already went from $1.38 rather, in May of 2014, down to the 107 mark. If we pull this back 10 years, what you're going to see is pretty amazing. It was at $1.60. Imagine that. So in 2008, anytime we go to Europe, it would be a fortune. It'd be $1.60 to $1. Now it's only $1.12. That's pretty cool, man. And if, in fact, we ever break that, then you're going to see something that's crazy. Because if this is an ABC down, you get 139, you get a 35-cent A to B, which would get you, 20, that'd get you 80. Oh, my God, that gets you like 76 cents. And we've been consolidating the same place now since, March of 2015. But if the dollar actually does want to get that type of juice, then you're going to see that euro that's going to be down fast and furious. You stay right there, folks. We'll be coming right back. And, of course, don't forget that our Ant-Man is Mr. Andy Heck coming up next, 5 to 6 Eastern Time. And if you're in your car, you can get us right on your cell phone. Go to TFNN.com, hit Tiger TV. We're right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. The Oracle ORCL, that's trading out of $40 right now. So that's going to put a little downward pressure, inside some of those software folks in the morning. What you are going to have, so you got option expiration tomorrow, folks. And what happens on option expiration, and this is something you want to wrap your head around. So let's see, is it quad? I'm not sure if it's quad trip. What happens is that if it's quad option expiration, that's when the futures, I'm not sure whether the futures do expire tomorrow, though. It's every quarter. Yeah, they do. They do. Okay, so hold on. What's it, September? October, November, they do. Okay, so this is what you have happening. You can expect on the open that you're going to get a burst up at the open, and then you can very well give it up, because this is what it is, that the cash futures, the S&Ps, expire on the open. On the open. So what does end up happening is most times that you get a push, and then all of a sudden, bang, that's it. It's pretty amazing how they can push that at the open. That being said, what you have inside the indices is this. The Dow Industrials still can be an ABC structure on the way down. Dow Industrials, they came down. They're down pretty good, actually. They're down from 18,800, 18,648, 668. We're at 18,212 right now. The NASDAQ composite isn't an ABC down because The composite's almost at highs right now. The composite just went from Monday a low of 5,097, and right now we're at 5,249. The Russell 2000 absolutely can still be an ABC structure on the way down. That came down hard. That came down from a high of 1260 into a low of 1206. Hasn't got much juice since then. The SPY, of course, same setup. The SPY can be an ABC structure down. The SPY came down from a high of 219. We went down to 212. Right now, you're at 215.28. Bonds are the ones to watch. And what has happened the last few days is this, folks. And this is where it's going to be really wild watching. Is that when the metals were going down, and the materials were going down, that is what seemed to be bringing the S&P down, the NASDAQ, and the small caps down. The downdraft that had been created out here yesterday had to do both with the metals going down and then the oils going down. So as soon as oil went down, so it's almost like the commodities running this market. And what that would go back to is that goes back to the U.S. dollar, and that goes back to bonds. The culprit, more than likely, is the 10-year and the 30-year. Because what has happened is that the 10-year and 30-year have priced themselves down, yields up slightly, but up. The 10-year right now is right in at 1.69. I mean, that can go to 2.5%, and it's no big deal. The range for the whole year out here, inside the 10-year, the low was 1.35 and the high was 2.3. And even at 2.3, folks, mortgage rates are only 4.5, so it's not the end of the world. Bottom line, you can expect a lot of volatility out here tomorrow. Big action. You stay right there. Our man, Mr. Andy Heck's going to be coming up next, growling and prowling with you. And as I said a little bit earlier, don't forget that no matter where you are in your car right now, you can go right on your cell phone. And you can do this every day, folks. And if you haven't test drove it, please test drive it. You're going to see some great quality, HD quality video. You go to TFNN.com. On the right-hand side, just hit Tiger TV. You can watch Tiger TV. You're going to see a great audio, great video. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay tuned for Andy. Look forward to speaking right back here, 8 o'clock tomorrow morning. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.